Hi, I'm a Panda teaching you about risk management. If that's the weirdest thing you see today, you're not on the internet enough. All right, let me walk you through a real NASDAQ futures trade I took today and show you why proper risk management and position sizing matter more than finding the perfect strategy. Looking at today's NASDAQ futures chart, we can see price rallied through the Asian and European sessions, then pulled back sharply during the US Open. The move up came as markets reacted positively to news about the potential end of the US government shutdown, adding some fuel to the momentum. The US Open was interesting. Price gave back most of its earlier gains and retraced sharply. There's a sharp drop, breaking below prior intraday structure around the European session lows. That breakdown likely triggered stop losses from late buyers and drew in short sellers. This could be a classic case of a bear trap, a trading signal that tricks traders into thinking the market is about to move lower, but instead reverses upward sharply. I know, because I'm a bear. It's about 11 a.m. EST, well into the US Open. I'm executing a trading idea here. I believe this session's price action is a fake-out designed to flush out weak bulls, a classic bear trap. My conviction? Price rallies into the close. To execute this setup, I'm using TradeAway's Trade Plotter, an order management system that lets me size my risk precisely. First, I'm going to create a new plan, calling it NQ Buy. My entry strategy is to take half my position at market and add the remaining half if price retraces further. This approach helps improve my average entry price if the market dips slightly. My stop loss will be placed below the European session lows, and my take profit will be set around the US session open. The setup looks good. Let me quickly verify my risk parameters in the Overview tab. I'm risking 0.6% with a 2.87 risk-to-reward ratio. Once confirmed, I'll execute this trade in MT5. For context, TradeAway is a web-based trading platform that connects directly to your MetaTrader terminal. All right, we're off to the races. Trades are now live. The trading panel shows my total risk across both the market and pending orders, including max profit, max loss, and margin. These are essential numbers to monitor, especially if you have multiple positions open. Inside the trade plotter, I can also import these active orders back into the system to fine-tune parameters like stop loss or take profit levels as needed. One thing I'm not going to do is change my trading plan. I'm going to let the trade play out. Price has now moved lower and has triggered my pending order, so now I'm in for 5 lots. Nice bullish momentum starting to build here. Price is breaking the 5-bar high on the 5-minute chart. Bulls are stepping in. At this point, I could extend my target to capture more upside, but I'm going to stick with my original plan and take profit at my target. Price is pushing higher, and our take profit target is within reach. It looks like it's about to get filled. Target hit. The trade booked a 1.6% gain while risking 0.6% of the account. The analytics dashboard updates instantly after the trade closes. This trade worked out, but it could just as easily have gone the other way. We could be looking at a loss right now. That's the reality of trading. You never control the outcome, only your process. So here's what actually matters. Always manage your risk first. Know exactly what you're willing to lose before thinking about what you could gain. And stay disciplined. Follow your trading plan. The truth is, trading is a risky business. Your job is to manage that risk before it manages you.